Trend is your friend. What? What is this guy talking about? He's ICT trader and now talking like the retail shit. No, brother. I'm telling you the truth, the real way to trade or read the price action by ICT concept. Wednesday and Thursday. In these 2 days, most of the time you have to think like trend is your friend. Over there, you don't need 15-minute fair gaps. You don't need 15-minute chart. All you need just 1-minute chart. Today I will add the 2-minute chart, as I have already told you that you can add another concept with your entry so that you can be more confident. So welcome back to another episode of T2 SMC Trader. Make sure that you have given me the likes and you have subscribed to my channel if you are new. So this is my 15-minute chart, and I was telling that if market would love to reverse, this minus 2.5 standard deviation is the perfect place to reverse. Now look over here how beautifully market has closed above that minus 2.5 standard deviation. So this was telling me that no, market is not going to reverse from there. Instead of that, it is keep going higher. How do I know that market is keep going higher? Because today is Wednesday. Wednesday is actually the trending day. Okay, in that day you don't need that 15-minute chart as well. When the trend is confirmed, that means market is bullish or market is bearish, all you need the 1-minute chart. From 1-minute chart you will wait for this type of things, then market structure shift, fair value gap, boom. Again market will do the same thing. Market will take the liquidity, market structure shift, fair value gap, boom. Okay, this is how the trend day works. So in Wednesday and Thursday you will think trend is your friend. Now I'm going to 1-minute chart. At the same time I will open the 2-minute chart as well, because I would love to show you the confirmation things from 2-minute chart. So here on my left this is 2-minute chart, and on my right this is 1-minute chart. I have already shown you the morning session entry. Over there, the morning session entry, it was perfectly expect higher, and we caught the bottom. Now I would love to explain the PM session. Okay, so over here the PM session start around 1 p.m. Here this is that 1 p.m. Let me mark the 1 p.m. Okay, this is the starting of 1 p.m. If you take a closer look over here, as I told you, in trending day, you don't need 15-minute chart. All you need 1-minute chart to see that if it can take some liquidity. Over here, market went lower. It didn't take any liquidity. But at the same time, this was the first opportunity to take the entry around the PM session. Okay, market didn't take the liquidity, but it has traded this fair value gap perfectly. It went lower, took some liquidity, a very small liquidity. Okay, I didn't count that, that's why I didn't take that entry, but let me explain if you would love to take the entry. Here this is the 50% of that week. Okay, over there it tapped to this 50% of that week, then a very nice displacement. When you got that displacement, this is your market structure sheet. Over there you had this market structure sheet, entry fair value gap. Where is your entry fair value gap? This is your entry fair value gap. Look closely if there is any other fair value gap, or if I showed you anything that is not logical. This is that entry fair value gap. Where is your breakaway gap? This is your breakaway gap. Okay, so let me actually change the color. Here this is going to be your breakaway gap. After trading this entry fair value gap, market perfectly went higher. Now as I told you, add your 2-minute chart and see if the setup is over there as well or not. If you take a closer look, there was the same market structure shift over there in 2-minute chart. The fair value gap over here, price tapped to this fair value gap, went higher. How far you can actually target? Now here is the standard deviation. I'm going to mark low to high, week to week, because this is trending day. And if I just mark the body to body, the actually let me show you. Okay, if I just mark body to body, then it's gonna be very small range. So here this is -3 standard deviation. Okay, this is -3 standard deviation. I love to target -1.5. If my entry is over there, my target should be there. It's a very small range, so that's why I would love to mark week to week. As it is trending and I know market is going higher, I can mark week to week. If I would get a better range by body to body, I wouldn't need to go week to week. Okay, now over here you can see this -1.5 standard deviation over there, so you can take your entry to that entry fair value gap over there, and your stop loss should cover the breakaway gap over there. This is the breakaway gap, and you can easily target that minus 1.5 standard deviation. Now the risk reward ratio is gonna be 1:2, near about 1:2. Okay, so that is the first entry. Now I'm going to remove, I would love to show you the next entry. Then market went little higher, went lower again. Take all of this liquidity. Let me remove this one. You can see that was the first entry. Then the second entry. Over there, market has taken this clean liquidity has been taken over there. Okay. After taking this liquidity, there was a market structure shift. This swing high, when it has been shifted over there, I got my market structure shift around that area. Now here is the entry fair value gap, same logic again. This is the entry fair value gap over there. I would love to mark that entry fair value gap, and this is the breakaway gap. So I will mark the breakaway gap as well. Okay, over there, this is the breakaway gap. You can take re-entry to that entry fair value gap. Here, your stop loss should cover the breakaway gap. Okay, and you can target minus 2.5 standard deviation with the same range. Okay, you can target until the minus 2.5 standard deviation. As minus 1.5 has violated, you should believe that market is reaching at least until minus 2.5 standard deviation. It takes too long, but finally it has reached over there. Risk to reward ratio minus 1:2. Now this market structure shift was not valid to me, because after making that swing high, market has made another swing low, high, low, high, low, high. Lot of works happened over there. Though it is trending day, I didn't count that as my market structure shift. I was watching this market. This was valid to me. I didn't take it because market didn't take some kind of obvious liquidity. The way it has taken the liquidity over here, market didn't do that over there. Instead of that, it worked like it has worked with the 50%, then expand higher, perfect. Then there was the next setup. I didn't take it because of the market structure shift. Now come over here. Okay, let me remove this one. So you have, so far you have seen two setup over there. This is the first setup, this is the second setup. I didn't take any of those. Market fall again. It was falling. If you see, when it was falling, some of you start to think that market is now going to reverse. No, brother, why you are thinking like that way? Today's trend is your friend. So whenever market is going lower, you will start to look for liquidity. I'm going to remove this one. Did it take any liquidity around that area? All of this accumulation, look at this accumulation. Okay, everything has been taken over there. Every single thing has been taken over there. What else do you see? Now let me clear everything over there. I don't need anything over there. I will try to make this video very small because I don't want to make it longer, as you don't like it. Okay, now over here I have this relatively equal lows. This swing low came near to this relatively equal lows. Now it seems like market didn't came very near, but at the same time it came near. Okay, it was going toward that sell side liquidity, but it didn't take it. Now from my morning session video, you know that history repeats that things. You know that better than me. I don't want to explain this one. Instead of that, I would love to show you that when market fall, I was seeing that market has taken all of this liquidity. Okay, so I'm going to mark this one as my liquidity taken. All of this liquidity has been taken. This is at the last hour. I mean 3 p.m. Market need to expand. I mean very instantly. It has to respect. Yeah, I mean expand. Okay. Now I opened my 2-minute chart as well around that time to see that if this 1-minute setup is valid or not. Then market fall again. After taking this liquidity, market fall again, took that low. Look, this low has been taken again around that area. I have seen this is my liquidity taken. Actual liquidity taken was over there. After taking this liquidity, there was a very nice market structure shift. Is that valid market structure shift? Absolutely, it's valid. Please watch my market structure shift video. It will help you to find out the perfect swing high for shifting market structure. Was that a displacement? Absolutely, that was a displacement. Was there any fair value gap? Yeah, I have this entry fair value gap, you can see, but it was very small. That's why I took the entry from the breakaway gap. Either way, you can take your entry from that entry fair value gap as well. There is nothing wrong. I took my entry when market tapped to this fair value gap. I took my entry over there. My target was that high. I mean, I didn't want to hold it until this one or that area. I didn't want to hold it. Instead of that, I wanted to close my trade around that area, above that high. Okay. Now, why I marked target over there. There's no logic, just no logic. Market is at the last hour after 3:30. I can hold my trade until 3:49. I knew that I am not able to hold my trade after 3:49. That's why I wanted to get out from this market as soon as possible. And in that type of situation, as my range was too small, I took re-entry to that order block. The lowest down close body close candle is my order block. So over here, you can see that was the order block. When it tapped to this order block, I took re-entry over here. Now, this entry is valid or not, it confirmed from here, from 2-minute chart. From 2-minute chart, you can see perfectly market has taken this liquidity, then market structure shift over there. There was a fair value gap over here from 2-minute chart. So 1-minute chart fair value gap, 2-minute chart fair value gap, 1-minute chart setup, 2-minute chart setup. Everything was perfect. This is the 2-minute order block. You can see market tap to this 2-minute order block as well, then expand higher. Market went higher, hit my target profit, then it come back again to that unfilled area. There was the unfilled area. If you were with me in my Twitter, you have already you have watched my execution. I have written all the notes over there. You have already watched that. Okay, then market came back again to that unfilled area, then boom, market went higher. This is the last candle from today's PM session. I believe that if you really understand the fact in Wednesday and Thursday, what is trend is your friend, then this trading is going to be very much easier for you. You are not going to fall into the trap. This is the trap. When market was falling, some of you start to think that no, market is actually going to fall to take this liquidity. No, it's not good. I mean, for all of this liquidity, no, it is going to fall to go higher again, because today is Wednesday and trend is my friend. So guys, if it is insightful, don't forget to give me the thumbs up. Don't forget to subscribe to my channel. You can see I even didn't use the 15-minute chart over here. This is not the first time. I keep telling this. In Wednesday and Thursday, you even don't need the 15-minute chart when your trend is confirmed. That is it a bullish trend or is it a bearish trend? How I identify my trend, I have already shown it to you. If you think it is insightful for you, don't forget to subscribe. Okay. So until the next video, cheers.